Social Security offers several provisions that can have a big impact on an overall financial plan for retirement. Understanding these provisions may help to increase your benefit. And in this video, we want to go through some of the more advanced strategies that may be helpful in your overall retirement plan. Do-over allows you to change your earlier claiming decision. For example, you can halt your current benefit and start receiving a higher amount, but you must pay back the benefits you received. You may elect a withdrawal or do-over decision, but it must be made within 12 months of the original election, and you're only granted one withdrawal per lifetime. Social Security is typically adjusted each year to rise with inflation, known as the cost of living adjustment, or COLA. However, an increase is not guaranteed. For example, there was no COLA for Social Security in 2010 and 2011. That COLA value for 2024 is 3.2%. Social Security retirement benefits may be adjusted if you are receiving a pension or retirement benefit from an employment that wasn't covered by FICA taxes. Generally, these are government employees and school teachers, though it can vary from district to district. Social Security benefits are intended to replace only a percentage of a worker's pre-retirement earnings. The way the amounts are figured, lower paid workers get a higher return than highly paid workers. For example, lower paid workers could get a Social Security benefit that equals about 55% of their pre-retirement earnings. The average replacement for highly paid workers is about 25%. Before 1983, people who worked mainly in a job not covered by Social Security had their benefit calculated as if they were long-term, low-wage workers. They had the advantage of receiving a Social Security benefit representing a higher percentage of their earnings, plus a pension from a job where they didn't pay Social Security taxes. The Windfall Elimination provision is meant to remove that advantage. Individuals who have 30 years of substantial earnings won't see a reduction in their Social Security benefit. For individuals turning 62 in 2021, the maximum reduction at full retirement age is $498. Also, the reduction in benefits can't be more than 1/2 of the amount of the pension. If an individual takes a lump sum distribution, Social Security will determine what the monthly payments would have been and use that in the calculation. The Windfall Elimination provision does reduce the benefit amount used to calculate spousal benefits, but it doesn't apply to survivor benefits. If you receive a pension from a job where you don't pay Social Security tax or FICA and are also eligible for Social Security benefits based on another person's work record, such as a spousal or survivor benefit, you may be subject to the government pension offset. This means the Social Security monthly benefit will be reduced by 2/3 of the monthly pension amount. For example, if you receive a non-covered pension of $600 per month and are eligible for a Social Security spousal benefit of $1,000 per month, the Social Security benefit will be reduced by $400. As with the Windfall Elimination provision, if you take your pension in a lump sum, Social Security will calculate what the monthly payment would have been and use that in the GPO reduction calculation. U.S. citizens are still eligible to receive Social Security benefits even if they live outside of the U.S. during retirement. Some countries do have restrictions or are ineligible, such as Cuba and North Korea. If you have a non-citizen spouse living outside of the U.S., Social Security payments may not be eligible if the non-citizen spends more than 6 months overseas. For more information about claiming Social Security benefits while abroad, check out the document titled Your Payments While You Are Outside the United States, available on SSA.gov. Benefits are available to dependents in a variety of scenarios. A dependent is defined as an unmarried child under the age of 18 or a spouse caring for children under age 16. Upon filing for benefits, up to 1/2 of the worker's primary insurance amount is available. This is up to the maximum family benefit of 150 to 180% of the worker's primary insurance amount. Understanding some of these more advanced Social Security topics may make a substantial difference in your overall retirement plan and financial goals. If you have any more questions, you can email us at education@thenoblegroup.com, give us a call, or visit our website at thenoblegroup.com.